Imagine selling the top of the market cycle, locking in millions of dollars worth of gains, and securing your financial future. If you know where to look, you could potentially sell in the top 5% and make insane amounts of money. In this video, I'm going to share with you the 9 key metrics that I use to call the market cycle tops. By the way, if you're new here, my name is Lewis, and in 2021, I was one of the very few people who made videos publicly selling the market cycle top, while other people were calling for Bitcoin to reach $100,000 and even higher. I put my profits into 2 ultra high luxury Miami apartments, and now I travel the world trading from my laptop, and I make videos just like this to help you in the crypto markets. But it wasn't always this way. Back in 2018, I lost everything I had when I bought at the market cycle top before it crashed 80%. Luckily, I learned from my mistakes, and in this video, I'm going to share with you the tools that I use to sell the market top my second bull run, plus even more things that I've learned along the way. If that sounds good to you, make sure to smash that like button, hit subscribe, and get ready to take some notes. When it comes to trading, data is your best friend. Without it, you have to rely on gut instincts. The problem with that is that the markets can, will, and do everything that they can in order to shake you out of your positions or make sure that your exit liquidity for the market makers. You see, when things are going well, everyone thinks that it'll keep on going up. And when things are crashing, everyone thinks it's over. By using data to control your decisions in the market, you take out the emotional decision making and you follow a systematic approach. So let's jump right into this and go over all of the market indicators and other things that I look at in order to call market tops and bottoms. The very first thing that I look at is where we are in terms of the Bitcoin halving cycles. This is a chart that I made that's an adaptation from a Twitter post by Zargao, where he showed that the number of days from the previous bottom to the halving is almost equal to the number of days from the halving to the next top. Going through the chart, you could see that from the first cycle low to the first Bitcoin halving was 366 days. From the halving to the first cycle top was 365 days. The second cycle low to the second Bitcoin halving was 547 days. From the second halving to the second top was 518 days, which is less than a month apart and about a 5% difference in the number of days. The third cycle low to the third halving was 517 days. And from the third halving to the third cycle top was 549 days. So there was about a 6% difference. The fourth cycle low happened in 2022 when FTX was caught stealing billions of dollars and subsequently led to the collapse of dozens of crypto companies. Just like the third cycle, there were 517 days from the fourth cycle low to the most recent Bitcoin halving. So if you take 517 days from the halving, that will put us around September of 2025 for the possible Bitcoin top of this cycle if the pattern continues. My game plan is to always have this chart available, and when we get to August of 2025, if the prices of everything are going crazy and we are up substantially, then I will sell and cash back out into USD. Now, just because this has worked before doesn't mean that it'll work again, which is why I also look at many other charts, including charts that plot out the dominance levels. Here is the Bitcoin dominance chart. You could see here that the bull market of 2017 started when Bitcoin dominance began to fall from 96% all the way down to 35%. The bottom of the Bitcoin dominance chart marked the top of the market. Starting in December of 2017, we entered into a bear market while Bitcoin dominance began to rise. It wasn't until 2 years later, in December of 2019, when Bitcoin made a double top at the key 61.8 Fibonacci level, also known as the golden ratio, and then started to move down. That was also when the next bull run began. Most altcoins topped out when Bitcoin dominance reached a low in May of 2021. And then in November of 2021, the Bitcoin dominance chart double tapped the lows and began to move up, while the entire market began to crash. Now, I noticed that the last bull market started at the golden ratio of the entire move down. So maybe this bull market will start at the golden ratio of the previous move down. If it does, then that means that we are very, very close to seeing some big moves. So that was the Bitcoin dominance chart. Another way to see this chart is to look at the altcoin dominance chart. This chart basically follows the bull bear cycles in that when the altcoin dominance is going down, we're in a bear market, and when it's going up, we're in a bull market. Now, don't get me wrong, there have been plenty of opportunities in the last 2 years, including Caspa, which we're up over 100x on. But in terms of what we normally see in bull markets, we obviously haven't been in one because altcoins don't fully retrace in bull markets. And yet, many alts are, or at least they were, back to or even below their key lows. Now, the last dominance chart to look at is the USDT one. This one is also really telling because when Tether dominance goes up, that means that more people are selling crypto and going into Tether, meaning that there is a sell-off in the market. As Tether dominance comes down to major support levels, that is when you want to be more cautious. When Tether dominance hits resistance and starts falling, that is when you want to be more aggressive. You could see Tether dominance moving up for all of the 2018 through 2020 bear market and the most recent bear market from November of 2021 through December of 2022. Since the Bitcoin bottom near $15,000, the Tether chart has been going down and Bitcoin went all the way up to $74,000. And most recently, as Bitcoin fell from 74,000 all the way down to 50K, the Tether dominance chart has been moving up. So there is a clear inverse correlation between the price of Bitcoin and the USDT dominance chart, which is exactly why I use it as part of my big picture analysis of the markets. So those are the dominance charts. Next, we have the total market cap charts. Total 1 shows the total crypto market cap, which is calculated by TradingView by adding up the top 125 coins market caps. The market cap for each coin is calculated by multiplying the number of coins times their current price. As a side note, if you want a free complete beginner's guide to TradingView, I'll put a link to that video in the description, or you could press the call out that should pop up at the top of the screen right now. You could see on the total market cap chart, there was a clear trend line that has been respected numerous times. So you could use that to your advantage and say, if the total market cap comes back down to that line that it has been respecting so often, then you could go in more heavy once you hit this trend line again. And also you could see that chart patterns like the head and shoulders pattern show up on this chart as well and help you show what is happening from a bird's eye point of view of the market. I mean, once you saw this chart back in 2021 and 2022, it should have been pretty obvious and pretty clear that the bull market was over and it was time to sell. Additionally, since Bitcoin is more than half of the Bitcoin market capitalization of the crypto market, it's also a good idea to see what other coins are doing if you exclude Bitcoin from the calculation. And also, since USDT and USDC make up a huge portion of the crypto market, excluding them is also helpful in getting a more clear picture of what the majority of altcoins are up to. That's why I look at the others chart, which shows the crypto total market cap excluding the top 10. You could see that this also had a huge head and shoulders pattern back in 2021 and 2022. And when it came back up in 2024, it tagged that major resistance, then started the downtrend. So if it comes back up there, you know that it would be a smart decision from a technical perspective in order to be a little bit more risk off. Similar to the total 1 chart, this one also has a trend line that has been respected quite well. Lastly, for market cap charts, I look at total 2, which is the crypto total market cap excluding only Bitcoin. This one is interesting because it had that head and shoulders pattern and then came all the way back down to the previous all-time highs, and that is where it decided to bottom out. You could also see that in 2024, it came all the way back up to the golden ratio and respected the Fibonacci as a resistance because it fell straight from that area. I look at these 3 different crypto market cap charts because it helps to create a really good overview of where the market is as a whole. The next chart that I look at is comparing Bitcoin against the S&P 500. At this point, the biggest players in the world are trading Bitcoin, and they want to make sure that they capture the upside it has against the US stock market. However, they also want to protect their capital. This is the best chart I could think of that merges traditional finance with the crypto markets. There are 3 key things that I see on this chart. They are the major trendline support, the major horizontal area of interest, and the major resistance area. These are key areas to look out for and pay extra attention to once the price gets close to them. Now, if you don't want to look at the charts every single day to know when these areas are hit, I have a full-time analyst checking the markets daily and alerts that go off in the Crypto Elite VIP to inform you of the best times and the times when you should be paying attention most, and when the prices hit the areas of interest, when it could be a great time to invest, or when it could be a great time to potentially take some profits. And so if you want the alerts, the trade signals, and so much more, plus you want to take advantage of having a full-time analyst checking the market for you, then go to cryptoelite.com/VIP. Next up, we have the US dollar index chart. The Bitcoin chart is denominated in dollars. So you would think if the dollar goes up, Bitcoin should go down, and vice versa. Typically, the dollar is inversely correlated to risk on assets like Bitcoin. Here, I overlaid the Bitcoin chart on top of the dollar and drew a box around the times when Bitcoin moved up in green or down in red. Overall, the biggest inverse correlation is that when the US dollar moves up, Bitcoin moves down. Bitcoin went down 8 times. 6 out of the 8 times, the dollar was moving up. The other 2 times, both were going down. So there's about a 75% chance that when the dollar moves up, Bitcoin will move down. Bitcoin also went up 8 times. 4 out of those 8 times, the dollar was moving down. 2 times, Bitcoin went up while the dollar went sideways, and 2 times, both went up together. So there's about a 75% chance that when the dollar moves down or sideways, Bitcoin will move up. Obviously, this isn't exact, which is why I look at a number of charts and other data points to see the big picture. The last chart that I look at outside of Bitcoin and ETH is the S&P 500. If people are fleeing the US stock market, they're most likely also selling the assets that they deem to be more risky, which includes cryptocurrencies. So it's always a good idea to have an idea of what the stock market is doing. And of course, I look at the Bitcoin chart itself and use technical analysis to help me determine when the top or the bottom might be in. Last cycle top, we created a high, went above that high, then fell back below it on the weekly time frame. This was a major top signal. At the bottom, we formed a key support, which was broken and then reclaimed. This was a major bottom signal. This could be figured out using technical analysis. I have tons of videos going over technical analysis, so be sure to check those out after this one. And if you want to know how to use technical analysis just like this to call tops and bottoms and make anywhere between $100 to $1,000 a day, then there is a full breakdown of everything that you need to know at cryptoelite.com. Now, let's move on to the indicators that I use that are outside of the actual charts. First though, if you haven't smashed that like button, do that right now as it helps out the channel tremendously. And write down a comment to let me know what concept or idea that you want me to cover next. Now, moving away from the charts and onto the more algorithmic tools. First, we have the Crypto Bitcoin Bull Run Index, known as the CBBI. According to the site, the CBBI is a Bitcoin index that utilizes advanced real-time analysis of 9 metrics to help us understand what stage of the Bitcoin bull run and bear market cycles that we're in. The confidence score indicates whether we are approaching the top or the bottom of a blow-off Bitcoin cycle. I use this as a foundational indicator on whether or not to buy or sell Bitcoin. The blue line on the chart is the CBBI score. Every time that it falls below a 10, the bottom is extremely close. And if it hits a 5, the price of Bitcoin is most likely so close to the bottom that I simply just buy. This could be a great way to get in incredibly close to a cycle bottom. Whenever the CBBI goes above 90, you know that we are getting pretty close to a top. For me, if it ever hits 90, I immediately start to scale out. And if it ever hits 95, I sell all of my crypto and I take it out of the markets. This indicator caught the first top of the market perfectly, but unfortunately it missed the second top because it was programmed based off of blow-off tops, which are the only type of tops that crypto markets experienced up to the last cycle. Still though, it essentially caught the top of the altcoin bull run since most altcoins didn't recover after May. And if you scaled out during that time, you would have scaled out between $45,000 and $60,000 per Bitcoin, which still would have been an incredible exit even if you didn't catch any of the second move up. Next, we have the RHODL ratio. This looks at Bitcoin that have been accumulated and haven't moved within the last week and the average prices at which they were bought at. It compares that with the average price of all the Bitcoin that were bought between 1 and 2 years ago and haven't moved since. It then multiplies this by the total market age, because as Bitcoin exists for longer, there will be more people holding for a longer period of time, and this just helps to standardize the true value for the ratio. Essentially, this shows the relationship between new investors and old investors. There is a very strong correlation between the amount of long-term holders' actions and the price of Bitcoin. Typically, when long-term holders start to sell and when a substantial amount of new buyers enter the market top is pretty much in for the cycle. This happened at the peak in 2011, 2013, and 2017. It also happened in 2021, but as you can see, the value for the RHODL ratio didn't quite reach the overbought territory, so no good signal was actually produced. Of course, it's unknown if we'll get into the overbought territory again on any of these indicators, but the fact that we didn't last cycle should add even more weight to it if we do. As soon as this hits the 2021 highs, I'm going to be looking for signals of a market top. And if this hits the overbought zone in red, that's when I'm going to begin to scale out of the market. Additionally, as the number of long-term holders grows and the number of new market participants reach all-time lows, that tends to mark the bottom of the market. And that is what is displayed when the RHODL ratio reaches the oversold green areas. The next tool that I use is the MVRV-Z Score. This is a very powerful tool and has been able to pick up market highs for each cycle within 2 weeks. You could see it peaked at the top of the market in 2011, 2013, 2017, and during the first Bitcoin top in 2021. This uses 3 metrics. The first is the Bitcoin market cap, which is the black line. The second is the average price in which every Bitcoin was moved, multiplied by the number of coins in circulation. This is known as the realized market cap, or the realized value, which is the blue line and is a really good indicator of the long-term true value of Bitcoin. The third is the Z score, which is the standard deviation of the volatility of Bitcoin's price. Typically speaking, markets are healthy and they go up and to the right. Sentiment is mostly good most of the time, and most people are up a decent amount from the average prices that they bought at. That typically means that the current market cap is a little bit higher than the realized market cap because people are not selling their Bitcoin. There's a standard range between these two market caps. If the current market cap starts exploding and the volatility is really high, then that means that people are up significantly more than usual. That widens the range between the two market caps, and the Z score goes up into the red zone, indicating that the market is overheated and that a top is likely to occur. On December 2017, the Z score was 10, meaning that the actual market cap was 10 times higher than the realized market cap. And on average, each coin that was purchased was worth 10 times more than the price that it was purchased at. Last cycle high, it reached a 7. So when the price is 5, 6, 7 times the average purchase price, that's a time where you should highly consider scaling out of your positions. And that is exactly how I use this. If it reaches 5, I start to become slightly more risk off. If it reaches 6, then I start looking for top signals and might start taking some profits off the table. If it reaches 7, I begin actively selling. And when people sell so much that the current market cap drops below the realized market cap, that usually means that there is a negative price imbalance and you're going to get Bitcoin at a really big discount. That is the green box on the chart, and that is when it's a smart move to start going heavy into Bitcoin. Next, I look at the NUPL, which is the Bitcoin net unrealized profit and loss. This uses the same realized market cap as the MVRV-Z score, which is the average last price each Bitcoin was at when it was transacted with, multiplied by the number of coins in circulation. This is in essence Bitcoin's fair value price, as it tells you the average price Bitcoin was transacted at. The NUPL value takes that and divides it by the current market cap. If you overlay a sentiment chart on top of the graph, it ends up showing you when most people become euphoric, along when there is market-wide capitulation. Euphoria typically happens with a NUPL value over 70%. So as soon as this value hits 70%, I know that the vast majority of people are in profit and most likely being extremely greedy. Typically, you want to take a contrarian approach to the markets. Just like Warren Buffett, the best investor who ever lived, said, "Be greedy when people are fearful and be fearful when people are greedy." So as soon as the NUPL value reaches 70%, I want to start averaging out of the markets. On the contrary, if the NUPL value goes below 0%, the majority of people who bought Bitcoin are underwater. This is when the NUPL value goes into the capitulation area. This rarely happens, and people who buy during this time have seen extraordinary gains the following cycle. Once again, if you want to be notified when these key levels are hit, you do get that as part of the service with the Crypto Elite VIP, which is over a $2,500 value all by itself. And so if you want to be alerted when these values reach these oversold or overbought territories and are at the extremes, then that is something that is available for you in the Crypto Elite VIP at no extra cost. And if you add in the trading signals and the market updates and the educational resources, then it's really a no-brainer to be part of the Crypto Elite community. And so you can click the link in the description if you want to join. And now we'll talk about the next indicator, which is the Fear and Greed Index. So next on the list is the Fear and Greed Index. This is a very popular tool that helps investors analyze the current market sentiment. As the name implies, it measures the spectrum of emotions going from extreme fear to extreme greed. This isn't something to solely base your trades on, but it is definitely one to look at to check your emotions and compare them to the overall market. When this hits extreme fear, you might want to buy. When this hits extreme greed, you might look to sell. And so going on, next on the list, we have the Pi cycle top and bottom indicator. You could see it called the first top in 2013, the second top in 2013, the top in 2017, and the first top in 2021 when Bitcoin was $63,000. It uses the 111-day moving average and a newly created multiple of the 350-day moving average, which is the 350-day MA times 2. For the past 3 market cycles, when 2 moving averages in this indicator cross up, we see that it coincides with the price of Bitcoin peaking. You could actually use the data from this chart to estimate the price of the next Bitcoin top and the estimated date. And if you do the calculations, which are explained in another video, it puts Bitcoin at somewhere between $205,000 and $249,000, somewhere topping out around April of 2025. And then the Pi cycle bottom creates an oscillator for the 2 moving averages, which could help show when there might be a bottom. Last but not least, we have the Bitcoin rainbow chart. The rainbow price chart is a long-term valuation tool for Bitcoin. It uses a logarithmic growth curve to forecast the potential future price direction of Bitcoin. It's pretty self-explanatory. If the price goes into the upper bands, you sell. If the price falls into the lower bands, you buy. I consider the upper bands orange. Is this a bubble band? And everything that's above that. Once Bitcoin starts hitting this line, I'll look for clues that the top is in. If it hits the FOMO intensifies band, I'll probably just sell everything and cash out to the market. And so those are 14 tools that you could use to potentially call the market cycle tops and bottoms. You could get all of these tools at bitcoinmagazinepro.com. You could also sign up for their paid services to get emails when these metrics go into their overbought or oversold territories. Alternatively, you can not only get that, but also get notifications when these metrics hit certain thresholds, such as the ones that I set forth and talked about in this video by joining the Crypto Elite community. And I'll also be combining these strategies along with adding new metrics so that you guys could get updated and get even more information. And so if you want the alerts and the strategies and all of the extra stuff, then go to cryptoelite.com/VIP and you could get everything there. And so that's going to be it for this video. I hope you enjoyed it. You're awesome. Stay awesome. Keep on making those gains, and I'll see you in the next video.